Crypto has been crashing like a lead balloon. And this video is going to be your survival guide to a crypto crash. It's no secret that the crypto market has been taking a hammering over the last month. I've lost about 40% of my portfolio, and I know a lot of people have lost a lot more. I was quite lucky because I didn't buy the meme coins. A lot of people bought too late and have lost a lot of money. And it's causing a lot of people to panic and lose faith in the crypto market. Well, in this video, I'm going to show you 4 things to do in a crypto crash, and also stick around to the end because I'm going to show you what changes I'm making and how I'm handling the whole situation. Now, before I start, let me just put it out there, and I know a lot of people are going to say, it's not a crash, it's a correction. Now, it might be a correction, whatever way you look at it, a crash can be the market correcting itself. So really, don't get too caught up on the terminology. And the truth is, no one really knows. But in my book, when the market tanks like this, it's definitely a crash. Now, with that being said, now I've hopefully warded off some of the crypto warriors, let's dive in and look at point number 1, which is don't panic. Now, if you're watching this video, you might be relatively new to crypto. You may have bought a coin because someone's told you to, it's gone down, and you're thinking, when am I going to get my money back? Well, the truth is, looking at your investments all the time, all it's going to do is give you anxiety. And it's going to rush you into making a panic decision and selling things that you really shouldn't, which is only going to end up making you lose more money. Now, don't get me wrong, we're all guilty of this at some point. I invested into Bitcoin, it dipped, and I sold it, and I lost about 15%, when actually 2 weeks later, I could have doubled my money. And with investing, this is an important lesson to learn. If you make that wrong decision and sell too early, learn from that mistake and don't make it again. Now, unfortunately, there is a lot of hype around crypto. So a lot of people have seen these hyped meme coins, they've bought in, it's dipped, they've lost a lot of money, and they're really panicked. But if you have made that decision, hopefully you've made it with money you're not afraid to lose, and you can hold it for the long term. And that's what you need to do with these crypto investments. Hold them for the long term, or hodl, as the crypto community would like to say. But you really have to realize that cryptocurrency isn't a get-rich-quick scheme. You might have seen these hyped up coins that have done 100x in value and people have made a fortune, but that just doesn't happen to everybody. For all of these great success stories you've seen, there's plenty of other people, maybe 98%, who just haven't made those kinds of returns. They've just lost money. And realistically, by the time an everyday buyer hears about a coin, it's probably going to be too late. Don't be buying these coins that have already flown up in value. So if you are panicked, just take a deep breath, and just realize you need to hold these coins for the long term. Hold them as an investment. If you've already lost money, if it's not too much, hold that money and see if it comes back up. But this does raise a question, is your cryptocurrency portfolio right? And this brings me nicely onto step number 2, which is reevaluate your holdings. Now, the question to ask yourself is, why are you holding the coins in your wallet? Are you buying the coin based on its merits? Do you understand it and what it's trying to be? Or have you just bought it because you've seen it on Reddit or Facebook and someone's told you to? Now, don't get me wrong, we're all guilty of this. I put $600 into OMI token after watching an Andre Jick video. We just won't mention how that one's gone. But I did like the points he mentioned in the video, and I thought it could be a nice long-term option. I definitely won't be buying coins he recommends again, but it was a bit of fun. But there is this common theme that I always see on Facebook. People say, what do you think of these coins in my portfolio? What am I missing? And then they'll show their wallet and they've got over 30 or 40 different coins, and they're asking, what else should I add? And then they're just taking random advice of people on Facebook and adding them to the portfolio. Now, this might be great for a YOLO strategy, but realistically, it's not a good investment path. If you were to ask these guys, why are you holding the coin? What does it do? What are the targets? What is this coin going to be? They pretty much couldn't tell you. So if you do have any coins in your portfolio that you don't really understand or what they're trying to be, maybe it's time to reevaluate them. For all of the coins that you hold, you should have price targets and look what you're trying to achieve. And if you haven't, maybe it's time to reevaluate. And then you can take those price targets. If it's down and you still believe it's going to hit that value, it can be a great time to buy more. As everybody says, it's on sale. I don't fully believe in that, but I do believe in buying the dip. So it could be a good time, if you still believe in those coins, to add more to your portfolio. Which brings me nicely onto step number 3, which is reduce your risk. So in terms of cryptocurrency, you have to think, how much of my portfolio is invested in crypto? Now, personally, these would be my guidelines. Anything up to 5% invested in crypto, I would say, is relatively low risk. Up to 15%, I would say, is medium risk. And anything up to 50%, I would say, is really high risk. And you really need to be not worried if you're going to lose that money. Anything over 50% I think is pretty crazy. If you had over 50% of your money in crypto at the moment and it crashed this much, Okay, it's fantastic if you bought a lot earlier, but if you put it in at the top and now it's come down in value, just think how much you could have lost. So really, I would say don't have over 50% of your money in crypto. And if you've made some nice profits, maybe it's time to take some of that out and reduce your overall risk. And the final step in the survival strategy is, what are you investing for? Now, when something like this happens, it can be a great time to look at why are you investing in crypto and what are you trying to achieve. Now, people invest in crypto for a lot of reasons, whether it's just to make some extra money or it's for retirement, or maybe it's to get a deposit for a house. Personally, unless you're really clever and you know what you're doing with crypto, you need to think of crypto as a long-term investment. Buy coins based on its merit and hold them long term. Buy projects you believe in, and then hopefully in a few years or 5 years time, it's going to be worth 10 times the value and you're going to make a great profit. If you need the money in under 3 to 5 years, then think about something more reliable. Look at regular investments, and even then, you need to have that long-term period. If you're looking for a get-rich-quick scheme and hopping from coin to coin, it's really not that, unless you're able to get very lucky. So just reevaluate your whole holdings, what percent of your portfolio is in crypto, and what's your long-term goal. For me, I actually don't even have 1% of my portfolio in crypto. So if you implement these 4 steps, I think it's really going to help you to reduce your risk in this crash. And hopefully it'll stop you losing money. So let me share with you guys what I'm doing and what my whole approach is to this crypto crash. Well, I'm sure it doesn't surprise you guys, but I am taking caution. Luckily, as I mentioned, I've not got any of these meme coins that I'm really worried about. All of the ones I hold are good long-term projects that I think will come up in the next 3 to 5 years. I'll continue to keep buying coins on a regular basis and averaging down, which is a really nice strategy to reduce risk. So for example, if you bought coins at $100 and you bought some more now at $50, the average price you paid is averaged out. And this is a great strategy with investing overall. Looking at the price of Bitcoin, it's been a fantastic bull run, but I much prefer to buy things when it's all leveled out. As much as people don't want to say it, it's very hyped and it grows based on popularity. When more companies adopt it and more celebrities jump on board. And once the big hype has died down and not everybody's buying it, it tends to settle off. That's not to say I think the hype won't return in the future and there'll be another fantastic bull run, but I think this dip will have scared a lot of investors. So personally, I'm going to take a bit of a backseat over the coming weeks and months, see what happens and reassess the situation. I'm not sure we've hit the bottom yet, but the truth is nobody really knows. So steer clear of any advice of people telling you this is a bottom and there's fantastic things on the horizon. You need to make your own financial decisions, do your own research and buy things you believe in. You can really end up wasting a lot of money buying different cryptos when in fact, if you put that into a solid investment account that grows every year, that's really something you should have. If you don't, I suggest you start doing that as soon as possible. I hope this has been useful, and if it has, please smash that like button and subscribe. And just remember guys, breathe.